unanimously expected by economists, fully priced in by markets, because the focus has been turning from too high inflation to too low growth. This morning we had the latest reads on GDP in the Eurozone, and we saw contractions in France and Germany. We saw total stagnation across the euro area. So politics really weighing on confidence here. And this is before we even really know how Donald Trump's tariffs on Europe are going to play out. So economists were seeing another cut in March already. What we're really interested in today are hints about April. So interesting to see that, they're all saying that disinflation is well on track. They're going to follow a data-dependent approach, very much expected. In terms of market reaction, barely any movement in the euro. We're really on the watch for euro-dollar parity at the moment, of course, given Powell has said he's not in a rush to ease policy. If you start to see more and more of a divergence between the ECB and the Fed, more euro weakness, that could feed back into the inflation picture, especially if you combine it with higher oil prices, and that will create headaches for Christine Lagarde. But if that rate gets raised in the press conference, I am sure she will say we are data dependent, not Fed dependent.
I'm glad you went there. Data dependency seems to be the phrase du jour, and that's basically what they go back to yet again. I'm curious which data is most important for an ECB that is a single mandate central bank, unlike the Federal Reserve.
Well, as I say, they seem to have brushed aside that 2.4% inflation print for December, the uptick. They've all talked about the concerns about services inflation, and yet, if this is anything to go by, a cut today and a cut expected in March, the focus, Lisa, seems to be on growth. And you say data dependence. Well, it's hard to deny that all around the world, central bankers have an eye on the White House and Donald Trump's trade policy.